Hello everyone, thanks for joining me again. And if this is your first time here, you're going to find a lot of videos related to home finance, mortgages, saving money at home, anything related to your finances at home. So if that interests you, please hit the subscribe button and come back to watch more. This particular video is about comparing conventional mortgages with VA mortgages. So I'm going to take you through just some of the basics, and then at the bottom I might link to a couple of articles that can take you into deeper depth on each of those two types of mortgages. In the event that you are a veteran or active military and you are deciding whether or not it makes sense for you to do one versus the other. So I have a little cheat sheet here where I'm going to be various topics that I want to talk about that I'm going to touch on. The first one is a down payment comparison. So when it comes to that, there really is no comparison. With a VA loan, most of you might already know, the down payment requirement is 0. However, with a conventional loan, the smallest down payment possible is 3%. Anything below 20% down payment, anything less than a 20% down payment for a conventional loan would require PMI or mortgage insurance. And that really requires its own video, which I'll create at some point soon. And if you're watching this at a later date, then you might want to search through my videos to find a video about PMI. But the next thing I want to talk about is the occupancy. So with a conventional loan, you can use a conventional loan to purchase a primary residence or a second home, a vacation home, or even an investment property. However, for a VA loan, the property you purchase must be 1 to 4 units, and it has to be your primary residence. It cannot be used for vacation or investment. So, talked about PMI briefly. I just want to circle back because I think I forgot to mention this with VA. Even though there's 0 down, there is no PMI. Credit scores, credit score requirements. So with a conventional loan, the lowest possible credit score you could have is a 620. Some lenders have self-imposed their own minimums that are higher than that, 640, 660. With a VA loan, the lowest possible credit score you could have to get a VA loan is a 500 credit score. Now, just like with conventional, lenders will opt in or out of accepting a credit score that low. Many lenders do not allow for credit scores that low for a VA loan. Some of them say 620, 600, 640. I think Veterans United even actually has a very, very high credit score minimum. Someone can correct me if I'm wrong, but I think it might be 660. Lenders have the right to change their requirements at a moment's notice. So maybe by the time you're watching this, it could be something else, but that's just something to keep in mind. If you speak to a lender and they tell you that the credit score requirement for a VA loan is X, and it's anything, that number they tell you is over 500, that just means that's their minimum, not the VA minimum. Okay. DTI, debt to income ratio. I have a video that we're going to be talking about DTI pretty soon, but it's your debt to income ratio, and for conventional loans, you're going to be looking at maximum DTI in the low 40s. But with a VA loan, there's no real published maximum DTI. However, if you're into the 40s and 50s, lenders are going to be looking for some other compensating factors to offset the fact that you do have a high DTI. And so an example of a compensating factor would be you might have a lot of excess cash or cash reserves. Even though you're putting 0 down, maybe you have $50,000 in the bank. That would be a compensating factor. I did create a video on compensating factors that you might want to look at. It gives you all the various examples of things that that lenders would like to see in either your credit portfolio or your financial portfolio as a compensating factor to compensate for things like a high DTI. Okay, what else do I have here on this list? Oh, fees and closing costs. that really is going to be another video that I need to create for that too. But the difference really between conventional and VA is the funding fee. There's a funding fee for a VA loan that's anywhere from 1.4% to 3.6% of the loan amount. And there are various factors that drive what that percentage will be for you. I'm going to definitely create a video to talk about the funding fee, so look for that, and I'll take you down there. But outside of the funding fee, everything else should essentially be the same between conventional and VA. So, for example, you'll have the appraisal fee will be the same, the recording fee down at your town hall. You might have, the lender fees might be very similar, whether it's origination, application fees, things like that are going to be essentially the same for if a lender's offering both a conventional or a VA loan option. All of those other costs will basically be the same with the exception of the VA funding fee. And the last thing I want to talk about now are rates. So for the most part, with good credit, you should expect the VA rates to be a little bit lower than conventional. As times change, those things change too. But if you have bad credit, that might not be the case. If you have a credit score and you're applying for a VA loan, your credit's only 520, for example, you can expect the lender to be charging you a premium and your rate's going to be much higher. So I have to add that caveat in there where your credit score will matter and will be a major factor as to what your final credit score will be, and it could be that if you have bad credit applying for a VA loan at a score of 520 versus a conventional loan with a score of 620, the conventional rate will likely be better. So hopefully that makes sense to you. I covered most of the basics when it comes to the comparison between the two types of loans. I'm going to link down to my main article that talks about these in greater detail down below. You can click and read that. If you have any questions, you can leave me those questions in the comments below. Thanks for watching, and I'll talk to you next time.